Oh, okay. Good morning, everybody. Kalimera Seolus. Kalos. Beautiful. Irtates, OIKONOMIKA. Welcome, everybody, to OIKONOMIKA, all about economics and finance. And as promised, I'm doing a live update on this mythology of the public finances black hole. Okay, so now we know that a black hole is something a mystery that we have not solved, but it's all about quantum physics and very complicated things. But the black hole, it's a point in the universe of infinite mass density, and you have a curvature of the time-space. Well, basically, time-space goes haywire, goes to infinity, and the gravitational pull, the gravitational force of the black hole is so enormous that sunlight cannot escape. Okay, so we know that if you have photons which are massless and they try to escape a black hole, and the photons can accelerate to 300,000 kilometers per second square, they cannot escape. So black hole is something incredible that we are, not we, I mean, anybody can read about that, but it's a mystery of the universe. So I definitely will not compare apples and pears and say that an Excel sheet with the public finance sector expenditures or borrowing, it's a black hole. Okay, because it seems to me that you start with the wrong assumption. No, it can be rhetoric or whatever. I will not mix things. Okay, so what I thought so good to be true, it actually, I made a mistake. I made a mistake because I was superficial in looking at things. And so, okay, very easy. We have on this column here, public sector excluding public sector banks, total current receipts. We want, as any good households, and you are scraping the pennies, you want to see what are your current receipts and your current expenditures. How much you waste on Tesco's, on Sainsbury's, or on whatever you spend your money, going to school, anything. Okay. And I have an income and I have to match it with the expenditure. Okay. So the new government started in July 2024. Okay, so we go and take the fiscal year row 162, April 2023 to March 2024. And we see that the total current receipts, okay, so it's the government current account, okay, it's the national income, the tax that everybody pays into all the government receipts, current receipts, was 1,096,288,000,000, right? So it was 1,096,000,000,000, the receipts, and we subtract with the current expenditure. How much did I waste at Tesco's? All right, I waste 1,097,250,000,000. So at the end of the fanfare, at the fiscal year April 2024, the shortfall in the current account was 900, read it, 900 and minus 962 million. Yeah, this is really easy arithmetic. There's nothing to do with differential geometry and the whatever, the Ricci tensor, the Riemann, whatever, complicated stuff. Okay, we don't need any Einstein formulas here. Okay, so at April 2024, the fiscal year, there was a current account shortfall of 962 million, which are not 22 billion, okay, in the real terms. Then you can say, okay, we analyze the public finances, and based on the projected growth of public expenditure, the cost of servicing the debt, etc., 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 the overall trajectory was that there was going to be an additional 22 billion on the public finances as a burden than what normally should be a prudent managing of public finances. Okay, but the new government, how prudent they have been, I'll show you now. So, fiscal year April 2024, there are 962 million shortfall in the current account. These are not managed expenditure, because we have, at the end of the fanfare, we have managed expenditure, which account for the, okay, here, you see, we have total managed expenditure, where a trillion and 230 billion. So where the borrowing happens? The borrowing happens when we have current receipts, we pay for all the current expenditures, what Rachel Reeves says. We want to achieve a balanced budget, we want to match. It was a match-up, okay? We want to match current receipts with current expenditure. We don't want to borrow for current expenditure. Okay, did I say that? Yes or no? Nobody answers me, but you make your own idea. Okay, so the total managed expenditure, so the additional borrowing that happened in the fiscal year 2023-2024, so to March or April 2024, was here, it's here, 1,230,797 million. Okay, so I can, for example, what can I do? I can do 1,200,000,000. No, okay, I need to see clearly what is the number here. Let's go back to the column. Okay, bear with me 1 second. Okay, we have here. Okay. So we have here this. We can basically, I'm sorry if I'm going slowly. So we can measure the current receipts with the whole managed expenditure and see what comes out. Of course, it will come out something. Let's put all the managed expenditure, let's put it this way. So it was 1,230,797 million. Okay, now we go and match it. It was a match-up with the current receipts, which are here. So the current receipts minus the current receipts, it was 1,096,288,088,000. So, okay, so we have the final figure that the total additional borrowing for the fiscal year from April 2023 to March or April 2024, March 2024, was 134,500,000,000. Okay, so, but what is evident from the accounts, so from the numbers, I'm not making up anything, okay, it's that current receipts minus current expenditure, there was a shortfall of 900 million, okay, there was no 22 billion, I don't know where it comes from. Now, if we want to see, we do it again, okay, we take this row, alright, okay, see it here, April 23, March 2024. So we have receipts for 1,288,000,000 minus current expenditure 1,097,250,000,000. We end up with minus 962 million. So there was a current expenditure in excess of 962 million. Okay, we are short nearly $1 billion. Let's take the row of the new government, okay? The row below, the last one, the latest one. Current receipts, 1,138,597,000,000, minus current expenditure, 1,145,000,000,000, oh yeah, there are two ones, 145 billion and 349. Okay, so minus current expenditure, there is a gap which is bigger of minus 6.7 billion, 6,752,000,000. So actually these new people with the same civil servants and I don't know what changed, they are doing a worse job than what was done the year before. And I don't see any 22 billion black hole. Okay, I don't see it. I'm sorry, I don't have an astronomical lens that I'm watching and at the black hole at the center of the Milky Way. I would love to do some astronomy observation, but what I have here is what it's on the ONS website. Okay, so there was a black hole, yes or no? Current receipts minus current expenditure, I don't see any 22 billion black hole. And I've been very, very transparent in taking the same number, and the total borrowing for the year was 134 billion. And then, well, we have also, okay, public sector, but yeah, we have central government total expenditure, which is a bit less because it's not general government. But anyway, so there are all these fancy methods of accounting for things. Now we can see a chart which is very, very simple to see. Okay, so how did the UK public finances performed in the last decade? Okay, so we have 2010, we have a gap of 100 billion, more than 100 billion, because the gray line is the total current account expenditure. The shadow gray or the light gray line is the current receipts. Of course, this big gray line on top is current expenditure. Okay, so we have a gap, funding gap in the current account of plus 100 billion. From 2010 up to 2015, okay, we have a narrowing of this gap, okay, and then basically you have a squeeze on the expenditure, and you have current receipts going above 800 billion, and there was a little tiny mini surplus just in the current account, which excludes all the additional borrowing for investments and all the other stuff, between 2017, 2018, and probably, yes, the end of 2018 or something like that, because 2019 it's here, yes. Then what happens at 2019, everything goes haywire because you have a change of government or change of prime minister, and then the borrowing explodes. And also with 2020, with the pandemic, you can see how the gray line steps up because there is the pandemic and you have a huge borrowing loading on the public finances, and the light gray line, the shaded line, goes down because receipts go down. But now the gap was not narrowing. The problem is the pandemic, the exorbitant expenditure for any country in the world with the lockdown has created a very large amount of additional borrowing. So the additional cost of servicing the debt is among the reasons that make public financing managing in this context, in this instance, more difficult. Okay, and that depends on the composition and the duration and how the debt in the UK is managed. And it's common knowledge, it's public knowledge, that there is a huge chunk of UK debt which is linked to inflation, and that stuff is toxic. And there are two problems. One is that the government borrows at 30, 40, 50 years, which is too long. It's too long because if you are managing anything, also which is public finances, and you are managing a pension fund, okay, you need to immunize your pension fund, and you need to constantly, every day, match let's say assets and liability, but assets are made of the sum of equity and liability, okay? So whenever you are borrowing for investment, you must have some equity of that investment so that you build an asset, okay? So if you are borrowing in 30, 40 years, what sorts of assets you are creating? I don't know. And how you are matching the cash flow from these assets that the government creates by borrowing to invest. So it's, I don't know, but I have read in other working papers about fiscal policy that the average duration of a portfolio for public finances, it should be between 7 or 10 years, because you align the duration of the debt that you are issuing to the real business cycle. So if you are borrowing for 30, 40, on a duration that is the 30-year gilt, the 25-year gilt, the 20-year gilt, you are extending the borrowing, you are increasing a lot the risk of the debt. What is the market risk in the debt? Because you are exposed to interest rate volatility, okay? Because interest rates go up and down. So you have systemic risk in the market, which is the bond market. You have interest rate volatility. So the longer is the duration of the debt, the higher is the interest rate volatility, so the higher is the borrowing cost. And the higher is the coupon that you have to pay. So the servicing of the debt, it's heavier. And basically, then on the asset side, where are these assets that provide this cash flow for 20, 30, 40 years? And then you are not aligning your debt, you are not aligning, I don't see any government doing this, aligning the debt, even France or Germany or who have the United States. You are not aligning the debt to the business cycle. Okay, if I have a 3, 5, 10-year business cycle, why I have to borrow for the next 30 or 40 years? It does make no sense, because the duration is too long, is too far out in the future, and it's very, it's riskier. It's a lot riskier. It's more expensive. And then I don't basically have a proper matching of assets and the real business cycle. I have these assets, I have a project, I want to, this factory or this block of flats, I want them up and running in the next 3 years. And so I have a real business cycle, I build social housing, I want the houses made in 3 years, I use a new technology to do that, and I want to see the cash flow from year 4 and 5. That's how I build an asset. I see a cash flow, I project what is the cash flow, and before that I do the investment. Okay, so I'm matching the borrowing with the cash flow. That's my understanding of doing things. If I ever would do anything, not in public finances, if I'm running a business, which is a misnomer, because businesses are not public finances, and I have liabilities, I want to know my assets if they are producing any cash flow or not. And I want to align the duration of the debt with the expenditure that I have to pay with the assets. So what the pension fund does, they have to match the liabilities with the cash flow. Otherwise, they run in a problem. So they have to pay private pension in the next year, 2 years, 3 years. So they have liabilities. So they must have something on the asset sides that provides the cash flow that matches exactly the liabilities that they have to pay. What are the pension fund assets? They are mostly all the time public debt. So they buy public debt, they clip the coupon, so they take the inflow of the coupon payment of debt servicing, and with that they pay pensions, okay? But they must have a balance, an equilibrium between the timing of the cash flow with the liabilities, okay? But just diverging from this, that, and the other, the matter of fact is that 2020 has caused a huge load of debt, and then the problem, issuing inflation-linked debt, it has been a misnomer for the UK, because then in 2022 we have 14% inflation, and still they have not changed since 2010. They haven't made the slightest improvement and say, okay, we are not indexing inflation-linked gilt to retail price index but to CPI. That's really bonkers. So there is something that it's stinks to high heaven, okay, because it takes 30 seconds to say, okay, no more RPI for inflation premia on gilts, CPI. You go and see CPI, it's always less than RPI. So with that, you just doing this simple tweak and reasonable change, then you say, okay, I'm going to save money on debt servicing, on the cost of debt servicing. So here it's very, very simple. There was a slight surplus between 2017 and the end of 2018. Then from 2019 everything goes haywire, and the gap between current expenditure and current receipts is not matching up, so that we know that for the fiscal year that started in April 2024 and ended in March 2025, there was a funding gap of minus 6,752,000,000, which was way larger than the current account deficits of 962 million that was left in March 2024. Okay, and we can argue. There is not anything to argue because the numbers are here. Let's see what was the behavior of the past government for the fiscal year starting in April 2022, ending in March 2023. What was the managing of public current receipts versus total current expenditure? Okay, so we have the row. So we know that current receipts were 1,033,530,000,000, right? Expenditure were 1,000,000,000 minus 1,053,210,000,000. So there was a 19.6 billion shortfall. So that's huge. That's a huge funding gap. Okay? Because we have 1,033,500,000,000 in receipts, but we have 1,053,000,000,000 in expenditure. So there is almost a 20 billion current account deficits of 22 billion, which was, or 20 billion, sorry, it's 19,600,000,000 for the fiscal year April 2022 to March 2023. And so the combined current account deficits of April 2022, March 2023, and April 2023, March 2024, it brings you to a 20 billion current account deficit accrued in it, summed up in 2 years. But any government does, not any, but unfortunately there is the bad habit of not balancing the book, but that happens everywhere. So in April 2021, March 2022, so the fiscal year before, we have 920 billion 574 million in total current receipts, and we have 932 billion 869 million in expenditure. So there was minus 12.2 billion current account shortfall. These are quite large, sizable funding gap in the primary account. Okay, and we know that these are here. Okay, we can see it here graphically. Okay, this gap between the light shaded line, which are total current receipts, and the gray line, which are total current expenditure, there is a funding gap. Okay, but the funding gap, it has bloated since 2019, because the chart is very easy to read. Okay, that is, you have a change of prime minister, and then you have an election, and you have a widening of public expenditure because there is a global lockdown. Okay, but the combination of continuous political instability, and so the change of fiscal policy, and somebody comes in and say, okay, we're going to spend a lot, I don't know on what, on level up, level up, HS2, level up, that stuff. We don't have a train, there is no rail track, I don't know, I have no idea. So basically, and then the lockdown makes necessity virtue, and so you have to borrow a lot because people stay at home. At least those with the PAYE, they received a wage, that's it, without doing anything. But people who are self-employed like me, I had to live with my own money without asking anything to anyone. And probably I have given more than I didn't ask for anything. I didn't receive anything. So there is the funding gap, and so the gap is evident in the numbers which are recorded, and we can see now row 159, the fiscal year of the pandemic. Let's see the lockdown, what creates. So current receipts were, between April 2022 and March 2021, 791 billion 934 million. But current account expenditure, they were, wow, 977 billion 675 million. So only in the current account there was a funding gap of minus 185 billion 741 million, which is humongous. This is Zimbabwe numbers. Okay, and why? There is a lockdown, so current receipts basically they collapse because there is the economy, it's not going on all 12 cylinders, right? And so there is a huge funding gap. Okay, but if we take the fiscal year of April, okay, we have a current account surplus. Okay, now we can see April 2019 to March 2020, we have current receipts 826 billion and 500 million, minus current expenditure, they were 790 billion 232 million. There is a zero too much. So there was a 36 billion surplus, which was okay, which was good in the current account. Okay, same was for April 2018 to March 2019. We have current receipts of 800 billion 713 million minus current expenditures 759 billion 879 million. So there was a current account surplus of 51 billion.8. Okay, fiscal year April 2018, March 2019. So, and also April 2017 to March 2019, we have 779 billion 445 million current receipts minus 742 billion 465 million expenditure. So we have a 36.9 billion current account surplus balance, positive balance. Then there are all sorts of additional borrowing for investments and all debt servicing, all that stuff, whatever you want to call it, not whatever, there are precise things. And then you have a total government deficit, but the managing of total public sector, excluding banks, total receipts, compared to public sector total expenditure, it was fiscal year 2017-2018, 2018-2019, 2019-2020, you have 30, 40, 50 plus billion surplus, okay? And the pandemic blows everything away, and basically now you have a funding gap because of the lag effect on public finances of the global lockdown. But the fiscal year, again, of April 2023 to March 2024, it was balanced with only 962 million in shortfall. The new government has come in and it's already close to one fiscal year with 6.7 billion in primary account, current account deficit, funding gap. So where is the black hole is at the center of the Milky Way, because any spiral galaxy at the center has a black hole. If you read a bit about astrophysics or astronomy, you would know that galaxies which are shaped as a spiral, okay, which follow the Fibonacci sequence, at the center they have a black hole. Why? Because it's the center of mass of gravity of the Milky Way, it's a black hole, right? And then the gravitational force of the black hole makes the Milky Way rotate, okay? So you have all this moving around of all the branches of the Milky Way spiral galaxy. Let me take a picture of the Milky Way, which is not the chocolate bar. Bear with me 1 second. We are live, 32 minutes. Nobody has watched this live. I will update it. Yeah, okay. So that's the Milky Way. Here, this very bright dot is the black hole. Okay, we are on the Orion Nebula. We are at the periphery of the Milky Way. We are here, Orion spur. The sun is here, so we are on the Orion Nebula. We are one of the many spirals around the Milky Way. And the center there is this famous black hole, which has definitely nothing to do with this. Okay, so I don't have any opinion. Or I don't have anything else to say, because economics is a science. Accounting is doing the math precisely as the numbers are. So the previous fiscal year we have 1,138,597,000,000 in current receipts, and we have 1,145,349,000,000 current expenditure, so there was a funding gap with new government of minus 6,752,000,000. Please don't focus, don't diverge on 45, 55, don't diverge, it's just the numbers, it's arithmetic, okay? Don't do any sort of stupid things. This was row 163, okay? 1,138,000,000,000 receipts, 1,140 and change billion in expenditure. There is a funding gap, there was a funding gap. So you start with minus 6.7 billion, and the current borrowing of the government is already minus 13 billion, so the government has to find 20, 21, 22 billion now. So the black hole is now of 22 billion. Yeah? So if we take the row 162, which was the last year of the previous government, which managed also to do current account surpluses for 3 years in a row, we have 1,096,288,000,000 current receipts minus 1,097,250,000,000 expenditure. You were left with minus 962 million to find and patch. Put a purple patch on that, and that's it. Alright? So when you say something, check the numbers. Alright?